Well, this isn't an intimidating space at all, is it? Hello and welcome to the Inclusive Growth Conference 2022, hosted by the Centre for Progressive Policy. I'm Martine Croxall, usually a presenter with BBC News, when they let me. I'm delighted to be your MC for the day and also the very strict timekeeper. I hope it's not too controversial for me to say, and heaven forbid that I should be in the middle of any controversies whatsoever, that we've been living of late through rather turbulent times, at home and abroad, politically, economically, culturally. Last week's autumn statement will see many people having to tighten their belts, and some have probably already run out of notches. The Centre for Progressive Policy is a think tank, non-partisan, committed to making inclusive economic growth a reality. By working with national and local partners, its aim is to devise effective, pragmatic policy solutions to drive productivity and shared prosperity in the UK. We hope that this year's conference, thankfully in person again, will provide people with a little bit of breathing room, an opportunity to take a step back, reflect on what's happened in recent times, look at how we got here, and be able to say confidently what we, in this room and beyond, might want in terms of how the future should look and the steps that we can take to make sure that growth is inclusive. Arguably, such solutions couldn't come at a more pertinent time. So thank you very much for being here today, either in person or online, and we look forward to hearing your ideas and contributions. I've been asked to make sure that if you ask a question, it really is a question rather than a comment. We are very proud to be able to connect you with a fine group of speakers today, and we're grateful to them for their participation. This doesn't happen without them. If you're using Twitter throughout the event, please do. The CPP handle is @CenterProPolicy. It's up on the screen. And if you could use the hashtag IGConf22, it just means we can all find each other. We'll be monitoring that hashtag throughout the day. If you're watching via live stream, you can still contribute to the discussion. Posing questions, of course. Fire safety information. If we hear an alarm, it is not a drill, it is for real. We have to go down the stairs and assemble on New Bond Street near the statues. If you follow the stairs, that's where you'll end up. Follow the green exit signs. We'll be breaking for lunch between 1:30 and 2:20. I would ask you to be back in your seats in good time because we've got a bit of science going on here. Later. I'm sure it'll all work out perfectly well. There won't be any issues with Bunsen burners or anything like that. Please would you make sure that your phones are on silent throughout the day. Our opening session is called Brace, Setting the Scene of Economic Turbulence, and it's going to examine the economic and financial turmoil in the UK over the last few weeks, and it will consider the long-term consequences for households, businesses, and the wider economy. So allow me to welcome to the stage Charlotte Alldritt, the Chief Executive of the Centre for Progressive Policy, who will lead this discussion, and she'll be joined by Kitty Ussher, Chief Economist at the Institute of Directors, and Ben Page, Chief Executive of market research company Ipsos. Welcome.
Growth, growth, growth. I'm not the first person to stand at a lectern in recent months and say that. But as the Chief Executive of the Centre for Progressive Policy, we're interested in a particular type of growth. Growth that is clean and sustainable, and growth that is inclusive. What do we mean by inclusive growth? It means enabling as many people as possible to contribute and benefit from economic prosperity. It means closing gaping inequalities in education, health, wealth, and income that have long held back productivity in our towns and cities across the UK. And it means recognising that investment in and reform of public services is as important as the traditional levers of economic policy. Recent months have shown how important a stable macroeconomic environment is for the prosperity and standing of our nation. Perhaps policymakers came to take this for granted. Low inflation, low interest rates, and fiscal policy perhaps more a tool of political ideology than economics. Growth. How do we get it? Who benefits and at what cost? Has dominated the political agenda, particularly since the summer. The Truss-Sunak leadership debate opened up the Economist black box, just a notch. Would lower taxes and deregulation stimulate growth to such a degree it could fund those same tax cuts without losing credibility in the markets? It turned out not. Is there a 50 billion fiscal black hole to be filled fast by rising taxes and public spending cuts? And if so, at what cost to long-term growth? After last week's autumn statement, we put this approach to the test. Should we allow skilled migrants to fill UK labour market shortages whilst encouraging or forcing firms to upskill their domestic workforce? Today, the leader of the opposition, Keir Starmer, will be discussing this and making the case at his speech at the CBI conference. Should we have to choose between a strong economy and public service on one hand and public services on the other? Or, as we at CPP believe, must these go hand in hand if we're to break the productivity malaise and real wage stagnation of the last decade? Jeremy Hunt seems to subscribe to this idea, at least in theory. Keir Starmer spoke of his vision for inclusive growth at the weekend. There is more consensus, perhaps, on what drives long-term prosperity and growth than perhaps has seemed to be the case, particularly in those heady summer debates. A scan of left and right-wing media, commentary and policymakers suggests inclusive growth is perhaps an idea whose time has come. With the shared recognition of the need for better education, skills, health, and even access to affordable childcare, a campaign that CPP has spearheaded, and one which is particularly important to me and other colleagues at CPP, but one that the Treasury has often, in fact, laughed us out of the room about. We need to help people access better economic and educational opportunities, attract inward investment, and create good jobs across the country. We need also to nurture R&D, business investment, and yes, reduce bureaucracy, but not at the expense of people or the planet. One person's red tape is another's right to job security rather than a 0 hours contract. One firm's right to pursue their shareholders' interests at all costs can leave others picking up the pieces. It is the job of politics to manage competing interests and priorities, and yes, regulate when needed. There's also a remarkable degree of emerging consensus, I think, on the need to devolve power to local places so that we build a sophisticated network of informed and responsive local leaders. We'll hear from Andy Haldane and Mayor Marvin Rees from Bristol more later today. And tax incentives. These might be part of the story, and tax reform a necessary part of the puzzle. But at CPP, we think that tax cuts for the wealthiest do not unlock a wave of investment or growth such that everybody benefits by default. Would it that it were that simple? Trickle-down economics has been under scrutiny of late, and it might have lost a few fans. But in the absence of a compelling alternative strategy, there is a marked risk that policymakers get sucked back into its populist allure. Tinker at the top, and hey presto. CPP is dedicated to finding a new economic framework, one based on the hard graft of boosting productivity from the ground up, spreading economic opportunity more fairly between people and places across the UK, and powering a more prosperous economy in which everyone can benefit. We thank you for joining us today as we take on this task. And finally, thank you to Martine for hosting us today, to my team, particularly Kate, Raquel, Grace, and Sam, and the venue for hosting us. It's a real privilege to be here in a venue which I watched year upon year as a child, and I'm very much looking forward to this scientific experiment, but we'll be keeping my fingers crossed that it actually works and doesn't flop. So please enjoy the day, and thank you once again for coming.
Thank you very much, Charlotte, and congratulations to you and the whole team for such a wonderful lineup of speakers, excluding myself, obviously, and what a timely event as well, exactly the right time to be having these conversations. So I'm Kitty Ussher. I'm the Chief Economist at the Institute of Directors, and I have an extremely simple task, which is in about 15 minutes to tell you what on earth's going on with the economy, and perhaps shed a bit of light on what it feels like on the front line of the private sector, because the Institute of Directors is the trade body for those people running small and medium-sized businesses in the UK. So we have our own data about what it's feeling like at the moment, and I will share that with you. I want to compare that to this time last year and to just before the pandemic to sort of try and situate what the economy is doing at the moment. I will then, the last bullet point says, simply, I will consider what this means for policy. I will probably have run out of time by then, so that will be extremely fast, and hope just sort of provokes your neurological pathways to develop policy ideas, perhaps in a little more detail later in the day. So my task is to set the scene, which I shall attempt to do by summarizing the official economic forecast. I say forecast, as everybody knows, if you have more than one economist, you get more than one forecast. And it turns out that the Bank of England itself couldn't reach a consensus on what type of forecast it gave to us a couple of weeks ago. And so it gave us two. And then, of course, we had another one last week. So actually, we have three official economic forecasts. So it's almost like the number 9 bust. You wait for ages and there's none, and then you get three together. We could have done with any forecast, frankly, around the time of the mini budget. So what do all those forecasts have in common? Well, they say, as we already know, that the economy is teetering on the edge of a recession. So the maroon line is the most pessimistic Bank of England forecast. That's the one you read about in the newspapers that said we would have a 2-year recession. The green line is the other Bank of England, they call it a projection, which is what they think might happen if interest rates don't rise anymore. That's Bank of England speak for saying they think interest rates possibly won't rise much more, or at least not as much as the market was expecting. The market projection is the maroon line. Then the yellow line is what the OBR thinks, also going down, but emerging much more quickly due to different assumptions around how they think households will behave and the underlying productivity rate of the economy, which is a little more optimistic. This particular graph starts, I think, at the beginning of, January last year, as we emerged from lockdown 3 and thought everything was totally wonderful. So you'll see real GDP growth as the restrictions were finally lifted, grew very fast, although not quite up to where it was before the pandemic. So what we certainly know is that the economy shrunk a little in the third quarter. That was affected by the mourning period following the death of the Queen, but most people expect us to be just in a little bit of recession right now. But I'm trying to give you something to feel cheerful about. So if you take one thing away from this, I want you to take away the idea that the 2-year-long recession is possibly a little too pessimistic. That's good news. You can invite me back in a year's time and see if I was right. So putting it in context, here's the exact same data series, but starting just before the financial crisis. So you'll see a very classic U-shaped recession as we went into and came out of the financial crisis. We kind of crawled out of it. It wasn't until 2012 that the economy was as large as it had been before we went in. And that felt pretty dire, and unemployment rose quite significantly. Then you'll see, kind of cheerful economic growth. It was driven partly by productivity increases, but also by a massive increase in, quite simply, the number of people who were employed. Both of those drive GDP. And then, obviously, the extraordinary impact of the lockdowns, which shut off part of the economy, and then the bounce back that was driven very much by the pace of policy and restrictions. And then at the end, you'll see those last three lines showing a recession, whichever way you look at it, but the speed and depth of that recession varying quite significantly. So what is a recession? This hopefully will be the last slide that I talk in too much detail about the R word. When I was a special advisor, no, I was a junior minister. I was the minister for the city just as we went into the financial crisis. So sorry, it was kind of all my fault. I was in charge of that. We invoked, although it was a very serious time, we did invoke that West Wing episode where you're concerned that if you say the word recession, then it becomes self-fulfilling. So it felt very much like that at that point. And I'm conscious of the mood, but I am consciously talking about recession. What is a recession? Well, it's technically defined as 2 consecutive quarters of economic contraction. So again, same color coding, you'll see that that's met. This is quarter by quarter. You'll see that that's met for almost 2 years in the pessimistic Bank of England forecast, sort of in and out in the optimistic Bank of England forecast, and much more cyclical view of recession for a year and then quite strong growth under the OBR forecast. So not as bad as you read in the newspapers, but pointing downwards at the moment. Turning to inflation, here's some good news. Trying to give you good news. Inflation is peaking round about now. May not be this month, may not be next month, probably will be in the next few months. But as you can see from that chart, it is way above the Bank of England's forecast, driven primarily by international rise in energy and how that's affecting domestic household bills, but also, as the Bank of England is making very clear, it has now become entrenched. We were the first to spot it in our own surveys because our SME directors were telling us over a year ago about how they were putting up prices in response to what was happening on the supply side, and they expected that to continue. The maths of this is that it then starts to fall, if nothing changes, it will fall pretty dramatically. That's not to say that energy prices will necessarily fall dramatically, although they are expected to fall back a bit. It's just quite simply that if you have high prices that aren't rising, inflation eventually returns to zero, because inflation is the rate of change rather than the actual level of prices. So the maths of it means that by this time next year, we should see a very clear sense that inflation, whilst it may not be on target, is falling back rapidly. And this forecast that I've got on the screen is the Bank of England's optimistic scenario. So what they are saying to us is they will meet their target even if they don't put up interest rates anymore. The market is saying interest rates will peak at 5%. They are actually, or roundabout, it varies a bit at the moment, they're actually currently at 3%. So if I had to put money on the future rate of interest rates, future path of interest rates, I think they'll go up a little bit until inflation is demonstrably peaking, because there's a lot of risk, but they probably won't go up as much as the market says. So go and place your money now and see if I'm right. Okay, we ask our SME leaders when they think inflation will peak. This is a rather complicated chart, but the story from it is that people running small businesses in the UK have consistently told us since June that they think inflation will peak in spring next year. And even as spring gets closer and closer, that is still the most popular answer as to when they think inflation will peak. Now, back in June, that seemed quite a long way away. But as we're getting closer, it seems that feels quite likely. As I said, inflation is peaking around about now or in the next few months. And so maybe they're onto something. And this is very important because inflation expectations become self-fulfilling. Because if you believe that inflation will peak in the spring and your supplier says, oh, I've got to put prices up because of inflation, you'll go, well, hang on. maybe this time last year, but really, do you really need to put prices up when actually inflation is peaking? And when your staff say, you have to give me more money, you have to give me more money because of inflation, you'll go, well, I get it, but actually we're nearly through this. And so therefore you're likely to be tougher as a business owner, and therefore it becomes self-fulfilling. So I think, fingers crossed, this will feel better quite soon. Unemployment, however, which has been extraordinarily low, will start to rise a little in the forecasts. This chart starts at the beginning of the financial crisis, where you can see, as I said, unemployment rose very dramatically. The little bulge that we've seen recently is the beginning of the pandemic, not the end of furlough, where there was no rise in unemployment, despite the Economist saying that there would be. And it looks, certainly what the forecasts are saying at the moment, is that eventually the recession will cause layoffs, and that will be of an order of magnitude similar to the beginning of the pandemic. Now, there's an important point about phasing here, and we can talk about this in more detail later if people are interested. But one of the lasting impacts of the pandemic has been the changes in labour supply, so less people offering themselves into the labour market. That means that even though the economy is flatlining at the moment, we've got a situation where there's actually as many vacancies in the economy right now as there are people looking for work. So even as the economy starts to soften, what will happen first of all is the level of vacancies will come down, and then only after that will we start to get higher unemployment. So unemployment is really going to lag the upcoming recession, which is great news for household incomes, because although it's bad to have your pay not quite matching inflation, it is a great deal worse to actually lose your job, because obviously then your pay falls by far more. So in terms of the most vulnerable and the kind of phasing of the next year, there is, again, another little tiny glimmer of reason to think that we've seen worse more recently. So that's a whistle-stop tour of the official forecast. I'm now going to attempt to tell you what it feels like very quickly for an SME. Headline is, it feels terrible. This is our tracker poll. This is now Institute of Directors data. This is our tracker poll of business sentiment. And as you can see, it is pretty much, and this latest data is from October, pretty much as low as it's ever been, and only a tiny few percentage points above the beginning of the pandemic. Now, given that the economy is open and fully functioning, that's quite an extraordinary result. So people are feeling extremely gloomy. What's driving it? Well, until October, what was driving it was very simply perceptions of the rate of inflation. So that's very simple. You ask people, how do you feel about the economy? It's bad. Why is it bad? Because inflation's high. Second has been, until October, just the sense of instability that comes from having an unstable government, political instability in the UK government, and then other sort of more tangible issues to do with what order books are feeling like, price of energy, relationship with the EU, and so on. But as you'll see from the scarlet bar, which is October's data, that completely changed. So in October, small businesses were feeling pessimistic about the UK economy because of the government. Okay? So the government became the problem. And so given what happened at the end of September, that's perhaps unsurprising. We saw it in the opinion polls as well. I take, again, some hope from this because it means it's reversible. And so perhaps business confidence, once the government sorts itself out, will improve slightly. How does it compare to last year? A little bit less positive. We asked a poll, we're coming on to proper polling from Ipsos shortly, but we asked our members, what are your business plans at the moment? A year ago, we had a very strong, we're planning for growth. And this year as well, we're planning for growth. But as you can see, the edge has been taken off it. And we have more firms saying that they're sort of consolidating or cutting costs. But even so, it's not the dominant feeling. So put all this together, here's 4 stylized graphs, and if you want to take away anything, I would take away this picture in your minds. So each of these graphs is just a simple representation of how businesses are feeling about a number of key indicators: their own firm's future prospects, their revenue expectations, their investment intentions, and their expectations for employment in terms of their own firms. Are they hiring? Are they letting people go? Each one of these starts in January 2019 and ends in October this year. And as you can see, in each case, there was a big shock from the pandemic, but actually, just judging it by eye, it seems to me that the mood is very similar to 2019, but tracking downwards. So it's unclear how far downwards it will go. That feels good because it's pre-pandemic. But on the other hand, 2019 wasn't much fun. Do you remember 2019? It seems like a long time ago now, but 2019 was when we didn't have a majority in Parliament, when the whole debate was whether we were going to have a deal or no deal in terms of our exit arrangements from the EU. There was a bit of a constitutional crisis in September, and businesses didn't really want to invest as a result of all that. So it feels like that. So it can be better, but in terms of totally going to hell in a handcart, I would say, no, this is a normal sort of people feeling leery about investing situation at the moment. Top 5 business worries are very much driven by the economy. I just want to come on to the policy implications of this in the 1 minute that I have remaining. So if these are the things that we're worrying about, well, what should government do from a business point of view? This is not from a vulnerable customer's point of view, but from a business point of view. So the thing they really had to do was a sense of stability and calm at the autumn statement, and inflation needs to demonstrably be coming down. They've tried very hard to produce a stable budget. The bar was really, really low for that. You know, please, can the Chancellor produce a budget that adds up, was basically what business was saying last week. So when, you know, correspondents from the Financial Times are ringing up asking to digest this part of that sort of micro statement, you know, fundamentally, please, could you just not do what you did before, was what business was really, really saying. So hopefully that holds. Cost of energy requires intervention. There's been a bit of intervention, but we'll see how that goes going forwards. Businesses want global economic conditions to improve. Not quite sure what the policy situation is there, but certainly our government fighting our corner on behalf of British business globally would help, and we haven't seen much of that recently. The enormous gap is in policy towards skills shortages. We've seen the debate on immigration today. Our view is that however you voted in the Brexit referendum, there is a perfectly valid political interpretation of that, which is that we should be growing our own. And there was nothing in the autumn statement on that, apart from an NHS workforce plan, which is obviously very welcome, but there's more to the economy simply than the NHS, important though that is. So we'd like to see similar workforce planning. And finally, our members are very worried about the trading relationship with the EU. We're not going to reopen that debate, but in terms of moving forwards on that, it's got to feel very practical, very prosaic, very fixing issues one by one with customs controls, border processes, and so on. So there's a few thoughts about what it feels like from the private sector, and on that note, I will end and look forward to the conversation. Thank you.
Oh, away, hooray, right. I'm Ben, I'm an opinion pollster, among other things. Ipsos used to be called Ipsos Mori, and before that Mori. I used to be in charge in Britain, and I'm now the global chief executive, and a commute to Paris, which, and interestingly, living in Paris for half the week, you do notice where the French higher level of social security and taxation goes, which is often on public services that no longer seem to exist in Britain. Anyway, my job today is to talk about where the British public are. I want to reflect on how we got here and perhaps some of the bigger picture trends. There's some brand new data commissioned by the Centre, which we'll share now, and I'm sure all of these slides will be on the CPP website if they're not already. And I'm calling it a polycrisis because I think that's it's a popular word at the moment, but it does reflect, this very difficult 2020s where we come out of the pandemic. Nobody anticipated. All of the central banks I work for, Christine Lagarde, Andrew Bailey, none of these people really predicted the persistence of inflation to start with. They're now playing catch up. We don't know what Mr. Putin will do next. I mean, I was very heartened by Kitty telling me, because I was avidly taking notes, inflation will peak in early 2023, and then things will get better. The challenge is, of course, we don't know what President Xi is about to do, or anything else. So I think that uncertainty is really the only certainty. And the challenge is that the British public is in a fairly sort of pessimistic place. So how are they feeling? They think we're going in the wrong direction. If you don't like the government and are feeling negative about things, you can take that and bank that. It's up, and Liz Truss did some amazing things. She broke every single record we've had since we began polling in 1974 for a rapid decline in prime ministerial popularity. I mean, it really did take some effort. I mean, she said she wanted to be unpopular, but I didn't really, it was very impressive. But anyway, they are feeling pretty gloomy. Having said that, and this is where I will be more Kitty-like, I'm going to keep saying this, actually the British public are usually pretty pessimistic. So this chart shows you just how many people think the economy will get better or worse. And I've taken us back to the heady days of New Labour in 1998. And basically, if you look at this chart, you can see a line across the middle. When the black line goes above that line, people net believe that the economy is going to get better. But when the public opinion is below that line, they think it's going to get worse. So all through Gordon Brown's amazing long boom, or for much of it, people were saying, oh, it's going to get worse next year. And then, of course, it didn't. Oh, but it will get worse next year. So although people are feeling pessimistic, I don't think it isn't, we are not at, and I think this is a very important point, and I do agree with Kitty, that we are not in, at the moment, a pandemic-type situation in terms of the economy, or a 2008 situation in terms of the economy. People are averagely miserable. And we need to, but having said that, that isn't necessarily great. And we do, one of the most striking things in my work when I look at Britain, when I look at Europe, when I look at the United States and Latin America, but not Asia, is this sense that the past is often more attractive than the present, and the growth that we were expecting or we thought that was natural in our economy seems to have disappeared, and we're very cross and would like to blame some people for it. Some politicians will then offer us particular types of people to blame for it, but there are probably other things going on. So at the moment, overall economic concerns crowd out everything else. And we ask you, what are the biggest problems facing the country today? It's the economy, it's inflation, it's the NHS. We are very concerned about what is going to happen next. And of course, given the antics of the Conservative government, and they really can only be described as antics until Jeremy tried to restore normal service. You might not be surprised at that. We're expecting that 2023 will be fairly miserable. So if we are going to have a recession and a peak of inflation in the early part of the year, the public, they think that things will get worse over the next year. They also say, and I think this is equally important, that their local economy will get worse. And that's particularly striking because people typically in Britain, as in many Western countries, will often say the country is going to the dogs. Well, how are you? Oh, I'm fine. I'm okay. Or, immigration's out of control. Well, what's it like in Hackney? Oh, it's all right here. But when they say that they're worried about their own local economy, that does show that they're pretty pessimistic about the future. When we look at what's driving the crisis, and I think this is interesting, and this does show very precisely that the Conservatives probably have sort of accepted in some ways, subconsciously or not, that they are out of time. Because in most countries around the world, when you ask them what is driving the problems with the cost of living, you will get Ukraine, you will get the state of the global economy, you will get the pandemic. You will not get crazy things our government's done. And that is unique to this country at the moment. Conservative economic policies up there with Mr. Putin as a disruptor. For a government that's been in power for 12 years, it does suggest they may be running out of time. But don't write them off yet. We'll come to that in a minute. But certainly we accept that there are international factors, as people on the right and centre-right would have it, but there are clearly also self-inflicted wounds. I mean, it is in polling terms what the Conservatives have done to themselves. It is literally like buying a 12-bore and blowing your toes off one by one. It's really quite impressive. So, I mean, at a local level, our work for CPP shows that, overall, this is net positive. So it's those who are positive minus those who are negative. And actually, on balance, when we ask what's going to happen in the economy, what's going on in your economy overall in your local area, you can see the southeast and southwest happiest, all sorts of things going on here. And of course, I'm showing you data at a regional level, not at a sub-regional level. Just having come back from something in Cornwall a few weeks ago and talking about cost of living for ordinary people in Cornwall, finding somewhere to live, it wouldn't necessarily look like that chart for the southwest where I come from. Interesting, of course, to see London there, which some policymakers would think is, ready to be levelled down in order to level up everything else. Not particularly cheerful, and of course reflecting that very persistent arc of poverty, the misery we have in a lot of outer London these days in terms of cost of living. And of course, once you take on board actual accommodation costs, actual travel costs, this chart might look a little bit different. But overall, everybody is net positive except in the northeast. Which is, very striking. Of course, the part of England that is, of course, has the least GVA, I think, or when I last looked, but Kitty will correct me. We generally think that inequality locally will get worse over 2023. The average is 52%, 61% in London, and again, people struggling to pay the rent in London, struggling to find somewhere to live. Grappling with that issue, 63% up in the northeast, saying that the society will become less equal. And this is important because Britain, when we look across Europe, and we ask people, what sort of inequalities are you worried about? Are you worried about gender inequality? Are you worried about sexual inequality? Are you worried about gay rights? Britain stands out unique in Europe in terms of our level of anxiety about regional inequality. We're actually less worried about gender inequality than the rest of Europe, but much more worried about economic inequality between the regions. And we're also pessimistic about inequality in our own areas and what's going to happen. And then, of course, the central, I think this chart to me is just a stark reminder of what we're facing in our economies in the West and in Europe and, of course, in America. And that is reflected in the Brexit vote. It is reflected in the election of Mr. Trump. It is reflected in Marine Le Pen doing incredibly well in France. It is reflected in massive disruption in Latin America. We don't perhaps talk much about Latin America. Latin America is currently the world center of populism, if you take populism as being a revolt against the elite. And that is because in all of these places, to various degrees, people have seen a future which has now not arrived. So as you can see, most people think that, are you confident that your local area economy will meet young people's needs? And you can see, absolutely not. The young are reasonably cheerful. They always are. But even they are generally pessimistic. And this, of course, is absolutely not just perception. The young people of today are more squeezed than my generation at the same age. We write loads of stuff about Gen Zs and millennials and all this sort of stuff. The major difference with younger generations today is they just have less disposable income, less money than previous generations. And this is behind this structural challenge in terms of what we think is normal in this country and in many of the other countries I'm now responsible for, is that in Britain, 9 out of 10 people believe the normal state of affairs is that each generation will be richer or should be richer than the previous generation. That's what people believe is normal. The challenge is that at the beginning of this century, about 8% of the population believed that their own children would end up poorer than them. By 2019, that figure had risen to 45% of the British population. That is a massive psychological shift, not about the country as a whole, which is always going to the dogs, but about your own kids, what's going to happen to your kids. And so absolutely consistent with this latest data is this sense that the future where each generation gets a bigger house or goes on holiday to Spain more often or has a conservatory, now there are whole loads of people who may never own a house. Their pensions may never deliver in the way that the pensions looking around this room of some of the people in this room, including myself, may deliver. And that makes people angry, and you can therefore offer them populist solutions like blaming somebody else, immigrants, the elite. It's usually I love the way the elite blame the elite. It's marvelous. And then say, of course, then blame elite Remainers, who are 48% of the population, which I do love. Anyway, but it is, in all seriousness, this is one of the biggest shifts in my lifetime in what I do for a living, which I've been in the same company for 35 years. And it's as big a shift as, say, in the ones that have happened in my lifetime on attitudes to homosexuality. Illegal when I was born, and today 2/3 of people say it would be fine if Prince Harry had married a man rather than Meghan Markle, and indeed, Meghan Markle may have been happier. Again, in all seriousness, this is a massive psychological shift, and so how we reverse that, how we give people hope that there is a plan, something's going to happen, is a huge challenge. So when we say, what are the following would you like to see in your area? What's the priorities? You can see more affordable housing. Most people in this country agree there's a housing crisis. Most people in this country agree that there should be more housing built in their local area, although when you go and try and build some housing in their local area, it gets a bit more tricky. We want, of course, sort out the high streets, better wages, etc. I think what's interesting from this, and I think this is perhaps a challenge for the geeky technocrats who like coming to events like this, and I'm sure you're all proud geeky technocrats, I am, is that fewer people mention some of these things around business investment, which has obviously fallen off a cliff compared to many other major economies since the late teens of this, after Brexit. Investment in education, children training, the connectivity, the infrastructure. It's almost as though we know these things, but nobody has yet reached any sort of consensus with the public, particularly across the political divide, over how and what we should actually do. When you get the great and the good together, they generally agree, but there are some real challenges. So, who's going to deliver it? Do you think he will reduce regional inequalities? 27% say yes. What about this man? 41%. So generally, at the moment, Labour is ahead on dealing with the cost of living crisis, dealing with inequalities, regional inequalities. Labour is, of course, well ahead in the polls. However, the challenge Keir Starmer has, I think, is really articulating the alternative in a way that can grasp, can grip the public imagination. If you ask a different question, which is who would make the best prime minister out of those two men, at the moment, by about 6 percentage points, it's actually Rishi Sunak following the budget last week. And so it will be very interesting to see whether the Conservatives can pull off a 1992 type situation or whether it's an absolutely slam dunk situation for Labour. But Keir Starmer's personal problem is that he still doesn't have more people who like him than dislike him. And for those of you who love opinion polls, the only people who get to win general elections are normally people who have more voters who say they like them than dislike them. Keir Starmer has yet to achieve that in any consistent fashion. So I think we are pessimistic, but we often are. And the government is definitely seen as part of the problem. Big shift in the last 6 months in that sense. We are more worried about regional inequality than anywhere else. We're pretty pessimistic about prospects for change. So I think the challenge is on for the great and the good, people who come to events like this, to work on a solution. But I think a key thing is we've got these multiple interlocking crises. We do need holistic solutions. We have fixed things, big challenges before, perhaps not quite as big as our productivity and growth challenge, but the pensions crisis in Britain was largely averted by an agreement that across party that in the end we would work a bit longer, we would pay a bit more, we would remove the freedom that Mrs. Thatcher gave people to not have a pension by making them have a pension unless they really tried not to. And with all of those things, we had a consensus and we fixed a problem. Can we finally agree about what good growth looks like, which everybody in this country wants, and everybody in this country, 90%, expect? The end. Thank you.
Thank you very much. Now we have got, oh crikey, not very long, maybe 10 minutes to take some questions from you. And I must remind you that they are questions that we want from you, please, not comments. If anybody is watching us online, you can tweet a question to us and Ross will hand it to us for the panel to ask. If you've got a question, please put your hand up. Tell us who you are, where you're from. It might be pertinent. And in particular, if there's anyone on the panel that you are addressing it to, and not me. Gentleman there in the blue jumper. Have we got a microphone? I think we have, yes. It's like pass the parcel at this point.
Hello, yes, Jim Cantle. I'm with Minority Inclusion, a charity that looks at including excluded people. But my question was, given the great drop in inflation that you saw there, do you think there's a chance that we'll have deflation for a while as opposed to 2% inflation?
Yes, I think that's for you, Kitty.
Yeah. Happy to pass to Charlotte. I mean, this is all talking about the future, yes. The sort of central forecast at the moment is that inflation will start to drop very rapidly, certainly by this time next year, will then undershoot the target, but not actually be less than 0. So might get down to 1% and then sort of glide into the sort of perfect nirvana that economic forecasts always have in 4 years' time. But obviously there's a huge amount of risk in that, and the Bank of England's very aware that everything it does only starts to affect the real economy 18 months after they do it. So there'll be constant calibration, I would say.
Thank you. The lady here with the green top. I'll come to you in a sec. Thank you.
Hello, thank you very much. My name's Helen Rowe. I've written a book called Eliminating Poverty from Britain. Comes out in September. I'm interested to know where you would start, because in my view it needs to be done in 5 years, because as a government that's all the time you're going to get. You've got no guarantee of re-election, and without raising taxes, because you can't go to the electorate at a general election and say, we're going to raise taxes, please elect us, because it never happens. So if you genuinely want to do it, you're going to have to do it in 5 years without raising taxes. So where would you start?
I answered the last question.
I know you did.
I'm just going to pretend I'm an opinion pollster and have no opinions.
I don't think it works that way. Charlotte might be able to help us.
Yeah, so at CPP, we're interested in this idea of inclusive growth. Part of that is about eradicating poverty, and it has to be. But the whole kind of impetus for inclusive growth partly came about because we know that getting a job is no longer a guarantee of being out of poverty. Particularly when we see, a majority of people who are in poverty are in working households. So I think there are a number of things that we need to do. I think that one of the best things that we saw in the autumn statement was the uplift in the national living wage, and I think that's to be commended. I think similarly in the uprate of some benefits. And I think then we need to look at more kind of economic type interventions. So we have to be fixing our inequality in education and skills, and particularly on skills, doing that. As fast as we can build a Nightingale hospital, we should be able to upskill for particular skills shortages, but to be able to go in and think about, at a place level, what skills would be needed and how those could best be deployed and how those could best be delivered, working with the kind of skills sector. So I think skills has got to be top of the list. There are multiple other factors that go into sustaining poverty or people slipping into poverty. And some of those, I'm just going to pick one, has to be about putting much more resource into a much better mental health system. And we hear a lot about that from politicians, but we are yet, I think, to really deliver on the capability that we could have, whether that's through the NHS app or through other services, to really meet the scale of that challenge that we've seen, particularly since the pandemic. So those are just a few things, but it's a big and tricky ask.
Kitty can't resist, so
I can't resist. I've been warmed up by listening to Charlotte. I agree with everything Charlotte says, but I'd like to just chuck one phrase in that I think is not in the public policy debate, so perhaps it would be interesting. I'm interested in your views as well. A lot of people self-exclude from work because they feel they can't work full-time and they don't want to, either because of perceptions or reality of their own health or their own caring commitments. So therefore they don't get promoted because they're always part-timers. So part-time progression are the three words that I think should be at the mainstream of public policy debate.
Thank you. We've got a question here and then one at the back. I'm just going to whip through as fast as we can. A couple of women here and three there, and then we're going to have to stop them. I'm so sorry.
Nick Bosenget, aiming for health success, consultant. It does seem time to get back to Keynes's prediction. The inevitable rarely happens. The unexpected very often does, particularly when all the old economic models were from these sort of good times, and there are going to be a lot of surprises with consumption, unemployment, various other things. Could I ask the panel, what's the most likely unexpected event that will really shake things up in the next few months or year?
Quick answers if we can, so we can get through as many questions. Who's going to take the Kitty?
Absolutely fabulous question. I find it a very useful question to always keep at the back of my mind. My personal little sort of moniker is that all forecasts are always wrong. So that's how I'm going to answer your question.
President Xi unlocks massive COVID wave in China. Economy takes off.
Here we go, at the back. Thank you.
Optimist.
Yeah. Well, that's good.
Yeah, just a couple of questions about Brexit. So there was significant talk about Jeremy Hunt's final admission that, you know, the deal that was struck was not particularly, how do I put it, attractive to the UK, which sparked a lot of positive reaction from multiple people in the UK. So has that been reflected in investors' confidence currently in your projections after last week's autumn statement? And secondly, had Brexit been more defined as to here's what we wanted to achieve, here is the outcome that we were looking for, had the self-inflicted wounds of the UK be much less right now in the current situation? So that's the two questions I wanted to ask.
All right. Well, I think the problem is that it's proven what I think the magic of Brexit has turned out to be a bit more difficult than expected. Is basically, what we were told at the time. If you go back to Mr. Gove, all of these people who told us that the EU would be falling over themselves to give us a deal and, it would all be fine. It's turning out to be more and more difficult, and it's now become like, communism or something, when nobody's really done it properly yet. And we have to keep waiting until even the people who believe in Liz Truss's agenda say, well, if only she'd been given more time to persevere with it, it would have eventually worked. But no, I don't think Brexit is clearly part of the problem. The political classes can't bring themselves to deal with it. It's a bit like dealing with council tax, which is so toxic an issue that 20 years on or 30 years on after the last revaluation of our housing rates, we still can't do it because it's just so toxic. So I think it's going to be a generation before we switch that.
I'm going to move on, if I may,
Yeah.
Lady here. You can make your answers your questions as brief as possible. That would be really helpful. Thank you.
I'm Chief Executive of Best for Britain, and we run the UK Trade and Business Commission. As I understand it, Kitty, trade as a proportion of GDP is falling in the UK. We're becoming less trade intensive, particularly by comparison to other G7 countries. How much economic growth can we expect for as long as we are not removing trade barriers with our nearest and largest trading partner?
Yes, we seem to have emerged from the pandemic with export growth that's slower than in comparable countries. So the pandemic is a massive distortion to the data, but it does look like there is something specific about Britain that, particularly given the question we've just had, doesn't take rocket science to work out what it is. GDP growth is driven by net export, so what's going on with imports is incredibly important. But to summarise, what we're finding is that the marginal exporter is no longer exporting, so it's too difficult for those that only export a bit. And so, yeah, that needs to be the focus of policy to get underneath the skin of that.
I'm so sorry, I'm going to have to stop. Thank you for being so understanding, but Sam's brandishing coloured bits of paper at us. Thank you for your questions. I was trying to remember who wanted to ask a question at this stage and come back to you a little bit later. But first of all, let me thank Charlotte, Kitty and Ben for framing this first session so well, which sort of sets us up brilliantly for the rest of the day. Thank you very much. I'll let you exit. It's great to have so many questions. I'm sorry that we didn't get through as many as I would have hoped.